Good afternoon, everyone. Welcome to Midday Update. It's been a while since I've been here with holidays, and the storm in the beginning of the month definitely set us back. But I'm back, and I want to go over a couple of things that's been going on in the market, both short-term, a little bit longer-term. So let's jump into it here. Let's pop into my charts, and we're going to start with the S&Ps as we normally do here. What a difference a week makes. We were on the verge of, falling off a cliff just about, a week or so ago, and last Monday the market gave us a big gap up, a little bit of a relief rally from what had been some heavy selling. And the stock, the market is not out of the woods by any stretch. If we look at just the concept of trend, what defines a trend, both uptrend and downtrend, is, lower highs and lower lows. And right now that's kind of what we're faced with. You can see every time we've snapped back, and you can see here we're just making, lower highs. So while we did get a nice reprieve bounce off these lows from a week or so ago, the market's certainly by any stretch not quite out of the woods. We saw some, the market close Friday into the holiday week, a very light volume type of bounce here. You can see as we rallied up last week, the volume just, diminished pretty much every day into the holiday week. And now we're coming into this session this morning, we came into a little bit of a gap down. We can look intraday here. This is our gap down. Again, market closed pretty strong on Friday, gapping down here this morning, rolling over around 11 o'clock, trying to bounce back a little bit, but market not really showing us any great strength. And on the daily, let's go back here, just a little bit of a pause day, which could be very constructive action for the bulls, but at this point, I would be very, very cautious about being long. Being a buyer was a much, much more sound type of trade with a bottoming tail down here than it is up here. Again, are we going to see another lower high in place, or does this rally, this bounce continue into something more substantial? I don't think we're really going to be able to know that until we pull back. In all honesty, that we can gauge strength from weakness. And I'd like to see over the next couple of sessions how this market, pulls back. Is it a very controlled type of pullback, or do we really, sell off a lot harder here? The other scenario would be that, we base up here and we develop some sort of, basing pattern over the next couple of days. But point being is that up here, you have to be very, very careful about putting fresh money to work on the long side, as I think, this market might, give us what we call an ABC, an A up, a B pullback, and then potentially, another leg up. So we'll see how this develops over the next couple of days. But at this point, this upward push looks like that momentum is dying a little bit today, and I'd be very careful at this level about putting money to work. Like I said, give this market a little bit of time to figure itself out. Let's move along here. Obviously, a lot of eyeballs on Apple, and Apple, again, bottoming tail from just a few sessions back at the 500 mark, and now we're right back to 585, 584 as we speak here intraday. And I suspect, again, being long up here is going to be a tougher place to be long. I do think Apple can trade higher. Let me be clear about that. I do think we can go higher, but like most things, I want to see it pull back, and then rally higher. So being a buyer, being a smart buyer, isn't about chasing the long side. It's about waiting for that constructive pullback to have a very, very calculated entry in terms of risk. And I think Apple could ultimately trade back up into this, 640, 620 to 650 level. Again, not all in one shot, but I think over, a couple of weeks, I think we could see some ebb and flow here that could take us higher. But being a buyer up here at 584 as we speak is probably a tougher trade in terms of risk. Again, it's always about calculated risk. Here's a weekly chart of Apple, and you can see some pretty substantial selling from the 700 mark down to 500. We've had a 2-week substantial bounce. We're now into the declining 8, which is this blue line, and right around this 584 mark. So I suspect we're probably getting close to some near-term resistance as the stock has had a nice snapback. And if you were able to participate in that, as I know many people did on the VTF, and I know Scott talked about it, and some of the other traders have been talking about this trade, you got rewarded. So make sure you understand that you don't want to hold on to these stocks forever. Again, right now There's a lot of volatility, and you can make money on both sides of this tape. But for Apple, to me, in my opinion, I do think we can go higher, but I also think we pull back before ultimately getting maybe a little bit higher. Let's talk about some banks. Let's look at Goldman. Really hasn't been much of a trade here. Again, we saw the sell-off, with the market. And while the market's had a nice rally over the last week, it's been a very controlled sort of upside here. Not a lot of, enthusiasm, in my opinion. But that being said, it's kind of, this trade to me is a little bit of dead money. And I suspect at some point, you're going to see either a break higher or a break lower. But at this level right here, is this setting up for another leg lower, or is this consolidating for another push higher? To me, it's a very, very difficult trade to figure out. We have a little bit of a double top up here around 125, which caused that last move down. Now, is this like I said, is this just a little bear flag pattern developing for something lower, or like I said, will we base here and then, continue to rally? I think, again, more time with the banks. And not all banks are the same. JP Morgan, to me, you can see, bouncing back, but today selling off with the market. So banks, to me, a little bit of hard money, as I call it. Not a whole lot of compelling reasons to be there. Bank of America, it's been a nice trade for a couple of people that, have positioned themselves here. But if that's not your cup of tea, I, wouldn't jump in at this level at prior highs. So banks are sort of a mixed bag, in my opinion. Research in motion. We talked about research in motion on off the charts, just a few weeks back in early November. We talked about this level here in RIMM, through that $8 mark as a breakout. And it happened back here, and we did get that follow-through. So now the stock has had a very, very large move percentage-wise from basically 6 in, late September, early October to 12 now. The stock's had a really, really large move. Short-term, definitely extended here on the daily chart. Probably could use a little bit of a rest, if not, a pullback, possibly even to fill this open gap before I would look to consider being a buyer of RIMM. So it's had a nice trade here. Again, don't chase this type of trade if you're looking for opportunity here. Wait for the pullback. Wait for some constructive bullish price action. But definitely one to keep on the radar going forward. Is one-time high flyer, could see more upside in due time, I guess is the best way to say it. Google. Google, to me, now has been substantially an underperformer. Again, just relatively weak to the market. Google did have a little bit of a snapback off the lows around 640 with the market, but really, really lackluster. Could it be gathering some steam here? It could, and Google, always has its own agenda. But the structure here, to me, has become relatively weak to the market. You saw what some of the other high-flying, tech stocks have done, like an Apple. Not quite seeing that same enthusiasm here in Google. So probably a hands-off trade for those of you that have your attention there. Another one that's caught my eye is this Regeneron. And Regeneron's been a very, very strong stock for quite some time. Whoop, sorry about that. The chart just went a little crazy. But you can see here in Regeneron that the stock has had a pretty substantial run. We look at a weekly, really been in a very, very strong uptrend on the weekly. And over the last couple of weeks, over the last 3 weeks, we've seen some pretty substantial buying. And again, even today, slight pullback here on the daily, but right now starting to leg back up. So another one that's on the radar. May give you one more push to the upside here in a couple of days. We're going to watch the basing action or the price action over the next couple of sessions. Again, you don't want to chase price. Let this set up. If it's going to go higher, it's going to, give you a very constructive, bullish consolidation up here. But definitely one that's caught my eye over the last couple of sessions. And I'm going to finish. I'm going to talk about Wholefoods, WFM, reported earnings, and starting to, look like it's beginning to build a bear flag. This is a weekly chart. You can see our moving averages have now converged and flattened out, whereas back here we had a nice steady rising trend. Tells us probably that upside momentum is over and there could be a trade back down. I do think we could see a trade back to support, which I would, call right around that $80 mark, somewhere in this, general area. To me, is the first layer of support. So for those looking for a possible short setup, again, watch to see how this, this bear flag starts to work here on the weekly. And let's move back again to the daily. a little bit of a bounce with the market last week, but today being sold again, and this could be the kickoff of some larger move down. So something again for the bears to kind of keep an eye on, put on the watch list against that 95 mark. Again, series of lower highs starting to develop here on the daily, and that usually leads to some sort of strong down move. So with that, like I said, it's been an interesting month, and I apologize for not, being able to provide more color and content. For those that have been on the VTF, it's been some really good, been a very, very healthy, good trading environment. And again, continue to stay focused on just a couple of stocks. It is a very fragmented market. You have some, some good snapbacks going on. You have some, stocks showing some relative weakness. So there's a little something for everybody right now. The market really needs to show us what it's made of at this level, because this is an area where, another turn down could occur. So we're going to keep an eye on it over the next couple of days to see what it brings us. As always, a plan trader is a profitable trader. Happy Thanksgiving, everybody, and I'll talk to you later.